Welcome to the Elevated Trader Podcast. I am Dr. Kristen Kidgel.
And I am Tracy Ball. Join us every week as we journey into becoming better traders.
We believe becoming better traders involves elevating our skill, mindset, and our health. In each episode, we will discuss the current book we are exploring, and we invite you to join us on this journey.
Are you ready to elevate your trading, mindset, and health to the next level? Let's do this.
Welcome to Part 1, The Complete Turtle Trader, How 23 Novice Investors Became Overnight Millionaires. Welcome back, Tracy Ball.
How's it going, Kristen?
It's going good. Let's jump in.
Yeah, let's jump in. So we're starting this book out, and I am curious because this was on your list. Why did you choose this book?
Because one of my favorite people on the planet, Hector Hernandez, which is one of the members of Real Life Trading and our real estate guru at Real Life Trading, he really liked it. He's like, because I was telling him about this idea you had with this podcast. And he's like, this is great. Have you ever heard of this book? It was one of my favorite books. And I'm like, no, but I'll put it on the list. And that's how it happened.
Well, that's awesome. Well, we're through the first few chapters so far.
Yes.
Basically, a brief overview. You get two guys that are quite competitive that basically have this competition going, and
they're very old friends.
Yes, and they're very old friends. They're trading gurus, okay? And when I talk about trading gurus, I'm talking about a man that's presence in Wall Street is very well known, and this story is almost told as legend, or as something that you can imagine being passed down from trader to trader to trader to trader, and it could be almost mythical to some degree. But this was real. It occurs in the 80s and 90s, and this is a man who made millions and millions and millions of dollars in the stock market. So he knew what he was doing, but he had this bet going, or this competition or discussion, or however you want to call it, with his friend of nurture versus nature. He believed that he could take any random strangers off the street and teach them how to trade.
And by the way, let's not forget to mention that he was in his 20s making those millions, and people were picking on him and just saying that he was a gambler and all these things, and there's no way he'll be able to last. He will lose it all. And the discussion of the nurture versus nature between him and his buddy, it's said that about a decade went by before he finally said, you know what? I'm just going to put my own money up for this, and we're going to run this test. And that's what he did.
Interesting. So you want to give a little bit of insight into, what your thoughts are so far on the book? Anything stand out?
Well, a couple things that stand out. Just they do spend some time going over him and his personality and his background. Chicago just didn't come from the, highest of living sort of background sort of thing, more off the streets, street knowledge. And he was known to be eccentric, even young. I believe that one of his teachers was quoted that they thought that he would just be sitting around smoking a cigar to having theoretical conversations. So he was heavy into mindset stuff. But he was also heavy into rule following, but money really wasn't his goal. And I love that. I want to let you run with that one, because I know that really stands out to you, how he looked at money.
Mm-hmm. Yeah, I did. I saw in the book that he actually looked at money as a way of keeping score, which I thought was a very unique way of approaching it. It's a check and balance, like you're either plus or minus. And that plus or minus is really a determination of your success. And it's not a dollar value. It's just either you're winning the game or you're losing the game right now. And it's a matter of, I just imagine playing basketball and you're up 100 points, then you're down 80 points. And are you winning the game or are you losing the game?
Right.
And it really doesn't matter whether you're up 100. It's in relation to something else. He was very competitive in that way. And I thought that was quite unique. A very, very detached view from the monetary part of money. And I thought that was really, really key. So
very little fear of taking large risks. but he liked to make sure that it was lose small.
Yeah, his risk management. I mean, that was key. And that's one of the things that I really like about what they're teaching, or the whole story, is that the premise of the entire thing, first, most important aspect of it was risk management. And then the rest of it was just rule following. And yeah, it's pretty cool. How did he go about finding these individuals to teach?
He spent,
because I thought that was unique.
Yeah,
too.
I think he spent like, I don't know, is it $10,000, $17,000 and putting an ad in like the Wall Street Journal and Barron's, and then just random people had to submit, some sort of resume, and then there was an interview, and he purposefully made it again that it was clear that it was his money. They would get a small percentage, but he really, really wanted people from every walk of life.
Mm-hmm.
And I thought that was kind of cool. Like he was.
So picking random people with random backgrounds. He even picked out a female, which was really unheard of. And I thought that was really cool. And there's actually something that I want to bring up later on. You haven't read it yet, but it's later on in the book that I thought was really, really funny about performance and who actually had good performance. So I will be bringing that up. All right. He picked random people. The selection was random as it could be. It was unique. I have a question. Would you have actually applied for the ad? Just curious.
100%.
Yeah?
Totally.
So would I.
Why?
If I'd seen it. I said so would I.
Oh, okay.
Yeah, so would I. As long as I had seen it. I don't know if I would have seen it because I don't know how far it was spread. And obviously I don't live in the United States, so I wouldn't have been able to actually participate in it. But yeah, I would have taken that opportunity in a heartbeat. Now, the other thing that I thought was really unique was basically the contract.
Yes.
Right? The contract of how they would be splitting the money, how long they could trade they were getting proprietary information.
Mm-hmm.
Right. So what are your thoughts on that?
Well, it's interesting because leading up to this point, it does discuss that he freely gave away his trading style to other people on the floor and other people that would just ask him. His point with this was to just have it as basically a test. He had an experiment going. There had to be some legality, I would assume, in it. He probably had people going, listen, lawyers and friends going, you probably should do this, especially because they're using your money. I think it was a 15% split. So they got 15% of the profits. And I think each person was starting with like $100,000 account. That's quite a bit.
It was pretty large. And I really like I said, they went through an intensive training program to really get to a place where they disassociated emotion from money. And that was really the key thing. And that's probably the biggest takeaway that I've had through the entire first few chapters that we've been reading is how prevalent that same theme keeps rolling through about, not being attached to money, not, following the rules, just staying disciplined, doing the same thing over and over again kind of thing. One of the things that did stand out to me was when he was talking about, I can't remember exactly where it was in the book, but he's talking about, the average trader, they get out there and they're reading the Financial Post or they're doing this or they're doing that. And he's busy reading Psychology Today and showing up like kind of when the market opens type of thing with very little pre-market prep. Yeah,
no news. He didn't care about the news.
Yeah, he didn't care about the news. And the guy, I mean, he's made millions. I'm talking millions and millions and millions.
Yeah.
And his main focus, once again, was mindset over skill, right? It just...
And he was very clear about that.
Yeah, he was very clear about that.
I'd love to have a discussion with him. I hope he says yes when we ask to interview him. He does have another book, so I think we probably should read that one too. It's called One Good Trade. And then while he's still alive, I mean, I don't know how old he is, but we could find that out. By the way, I want to throw in there and interject that intensive training that you were talking about was only 2 weeks. So they must have really pounded into these guys. Listen, this is the plan. These are the rules. Follow the damn rules. That's how I would imagine it. Now, granted, we do know that they discussed liquidity and they explained the market and they basically walked through the basics. But in the end, you and I chatted before. Okay, these are the rules, which is the plan. This is your trading plan. Trade it like you're a computer. And I always think of Cold Hearted Snake. And I always, unfortunately, think of that song, but I digress. So crack myself up sometimes.
I think it's actually,
go ahead.
I was just going to say that I think it's quite funny that they actually, these guys all signed these contracts and these disclosures. And I'm curious about their recognition when they realized that what they wanted them to behave was like robots. They were looking for people that could behave like robots with absolutely no discretionary autonomy at all. They just wanted to.
But I also am getting from what I'm reading that they wanted them to have the mentality of hitting home runs every time.
Oh yeah, that's key. Absolutely.
And so a computer can't have that risk feeling, because he did say one of the hugest turning points in his trading career is when he lost a lot of money. And he's like, that was so painful. And so then a computer can't feel that pain.
Right.
I guess it's really, in essence, just you controlling your emotions. Here's that setup fits into my rules, fits into my plan. I'm going to lose. I need to lose small, but I need to aim for the fences. And they did compare it to like this Babe Ruth kind of style, where it's like, okay, I'm going for home runs every time. But isn't it Babe Ruth that had also this highest strikeout?
I couldn't tell you. It's possible.
I'm going to look that up.
You do that. It wouldn't surprise me in the least, because you can't reach high levels unless you're willing to take risks. And most people that reach levels of success that are pretty high have had a lot of failure in the process. That's one of the common kind of paths. Most people don't hit that home run consistently over and over and over again. And most people don't reach success the first time they try. At least none that I know, right? So it usually takes a lot more than that.
Well, I think that's kind of everything on these few chapters.
Yeah, no, there's one other thing that I wanted to, first of all, the one thing about risk tolerance and being able to be emotionally detached, the one thing that stood out the most for me, and I don't know if you remember this part of the story, but the market was tanking. I think it was gold. They were in gold, and gold was just plummeting and plummeting and plummeting, and they were about to be bankrupt. And in the midst of being under that financial stress, that psychological stress, his partner wasn't able to make a decision, wasn't able to pull the trigger on anything. And Dennis steps in and pulls the trigger. And
doesn't he short silver?
He shorted silver because they had been locked out of the market. So there's these circuit breakers that trip and things like that. And you can't get in because of the drops. That what had happened is the market had dropped so much and there's a limit down on it. So once that drops, they're not able to make any kind of trade on it. So they couldn't exit their position with gold, and it's continuing to drop. But in the meantime, they could put a position on silver. They hadn't gone into a position where they couldn't do anything with it yet. Eckert wasn't able to pull the trigger. Dennis steps in, shorts silver, and makes that decision. And the fact that they made that decision and they shorted that, made money, and weren't bankrupt, the part that really stood out to me was the ability to actually pull that trigger in a tremendous amount of stress or under a tremendous amount of stress. And that is something that is very rare for a lot of people. And that's sometimes some of the biggest issues. And that's why we've spoken before about the importance of having a stop in place, because a lot of people that, you could say, hey, I want to get out when it gets to this. But the reality is when the price actually gets to that, your emotions start to kick in. And all of a sudden you start second guessing yourself. You start to, oh, no, I'll wait a little bit longer. You start to negotiate and come up with ways of making the reality of the situation not true. And the stop in place just takes away that part, and it enables you to pull the trigger, because not everybody is built like Dennis that could pull that trigger, make that decision under a tremendous amount of stress, knowing that everything was on the line, right?
And he had a knack, and I feel like a love and a knowledge of not wanting to do what the masses do, so to speak. So he wasn't the type, which then I feel like it's not as prevalent now, but back then most people were buy low, sell high. And he's like, no. Let's, buy while it's moving up and sell while it's moving down, sell into weakness and buy into strength. And then I don't think it's hard for me to make that change, but I think it was hard for them and those people because he was so young hanging around with a bunch of much older types of back then, floor traders, so to speak. So he was going against the grain there too.
Well, it's important to recognize it's a different type of trading. That's a trend trader. Well, in order to be a trend trader, you need to catch the trend. And in order to catch the trend, you need to catch it on the breakout. Otherwise you got to sit in a position for a very long time before it breaks out and then you get the trend. So the whole point is to catch that momentum. And that means you could be buying high and selling high, selling low and buying back to cover at a lower price, right? So it's just one of those things. It's a different type of trading, right?
Yeah, we're getting ready to find out.
Well, let's see you in the next episode.
Woohoo! Let's do it. Thank you for joining us today. For more information about the show, as well as our list of current reads, check us out at www.theelevatedtrader.com.
Remember to subscribe and share if you found value in today's episode. See you next week.